because that will ultimately sway you from, making the correct decision, which could potentially be cutting a trade loose for something. But you definitely want to have an open mindset to the market. I believe you got to be open to any and everything, because any and everything can happen at any given time. So you definitely don't want to play, I don't want to say like God with the situation, but you don't want to like act like you know the outcome of the situation, because you don't. It's all about probability. It's a probability game, at least from my experience. I'm sure you would say the same, Kev.
Yeah, so when what's it called? So we're gonna talk about psychology, right? So it's essentially like, when you're trading, right? It's like everybody has this this expectancy, right? They're expecting to make X amount, right? So that they make that amount, whatever amount it is. Let's say you have $100 account, you want to make 400 today, you want to make 500, you want to make 1,000, whatever the case may be. That becomes your mindset for the day, right? You're just like, all right, I'm gonna trade until I make $400, and I'm not gonna get out until I make $400. So, a lot of people have that thought process, and they may not even realize it, right? You may not even realize it, because then it's like, once you're up like 100%, like let's say you trade with $100, you're up, you're up 200, you're like, oh man, I want to make 400, I want to make 500, not even realizing the percentage that you're up, right? I'm not saying percentage is all that matters, but you have to be realistic with how much you want to make, how much you think you're gonna make. You know what I mean? What is it called? The more money. Understand that the more money you put in is the more you get out. And it's not even like, if you put $50,000, right, and you want to make 100, 200,000, cool, that's doable. But understand that it doesn't matter how much money you have. Like, even if you put in more money, even if you're like, oh man, I know if I put in 5,000, I can make 10. I know if I put in 10, I can make 20. I know if I put in 100,000, I can make 300,000. Well, the more money, understand also, the more money you have in there, right? The more emotional intelligence you're gonna have to develop, right? The more focused and aware you're gonna have to be, because that's a lot more money than $200, $300, right? And it also depends on how you look at money. How are you treating your portfolio size? Are you looking at your account and saying, okay, so I don't want to lose this money, and if I lose this money, I'm gonna be hurt. Like, I'm gonna be really sad if I lose this money, right? And then you can also look at it in a point of view where it's like, okay, this is my trading money, and I'm okay with losing it. Okay, I'm not saying I'm gonna use it all and blow it up. I'm just saying I'm okay with losing it, but I'm gonna use the proper risk management that I need to use, right, in order to produce some kind of result. So, with that being said, understand that you have to follow a system. It doesn't matter where the market's going, right? It doesn't matter how your trade ends up being. Just follow your system. If your system tells you to get out, then you get out. It doesn't matter if it goes back up. It doesn't matter if it keeps going up. All you should care about is whether you followed your system or not. And before you get into anything, before you get into any trade, you have to just, understand what you're getting into, why you're getting into it. It doesn't have to be, you don't have to make it complicated. You're entering because there's volume, right? Because there is a pattern, whatever, right? You entered because you followed, your system told you to enter it. And you have to wait for all the different factors to align themselves, right, before you enter something. And then you enter it. And then if it goes your way, cool, right? And then if it doesn't go your way, then you just, it's cool too. Because understand that losses come, right? All you have to care about is minimizing that loss. It's hard. It's like when someone tells you let profits run and to minimize losses, it's hard. It's not as easy as saying it, right? A lot of people have trouble cutting losses. They don't know when to. A lot of people have trouble taking profits. They don't know when to take profit. So understand, like, it takes experience, right? You have to be trading. You have to have traded, more than enough times to kind of understand how everything works. And that's why it's all like trial and error. If you just started trading, don't expect to just have green days, for like a whole month in a row, right? If that happened to you, then good for you. But a lot of people have trouble, especially when they first start. Not necessarily like bad trouble, but like a lot of people will also make a lot of money when they first start, and then they get too confident, right? Like, let's say you first start trading and then it's a bull market and the market just keeps going up and up and up and up and up for 2 months straight, right? So for 2 months straight, you're essentially making money. You're making a lot of money, but you're not used to the market conditions that are going to come. You're not used to a sideways market. You're not used to a news-driven market, right? So you have to understand. This is the key word, okay? You have to understand market behavior before you want to put anything in that is risky to you, okay? Understand the concept of risk too. Like, how do I put this? So when you're risking something, that must mean that you're putting in more on the table than you would be comfortable doing, right? So to eliminate risk, don't go in too heavy, especially if especially if you don't have the confidence yet, right? Don't go in too heavy for the sake of making more money, right? Because if the table ended up turning and you end up the trade ends up losing, how are you going to be able to manage your emotion? How are you gonna be able to manage your control, or how are you gonna have self-control if you have never, right? If you have never if you have never put yourself in that position before. Like, for example, you're in a sideways market and you go in heavy, thinking that thinking that whatever stock you get into is gonna go up, and then it ends up going down, and you've never been in that position before. You end up panicking, right? You end up panicking. Price goes down, you sell. You sell at the wrong time too. You sell, and then price goes back up, right? So when that happens, you're not following the system. You're selling because you panicked. That's not a system. That's a reaction. That's an emotional reaction, okay? Following the system doesn't, you're not putting any emotional energy out there. You're just following a plan. That's it. You don't have to be sad, mad, happy about it. It's literally, a game of probabilities. You're just, oh, my trade's not going well. Cool, whatever. I'm gonna cut it. I'm gonna move on to the next one, right? If nothing else shows up, then walk away from your desk and just be done for the day. Who cares, right? The key is to survive in this market, right? The key is to last long. If you, it's better to be in a position where you're waiting for opportunities and you can take it than to be in a position where you didn't wait for opportunities and you just went all in, and now now your account is down 50, 60, 70, 80%. And now it's like you can't even wait for an opportunity to show up because you're already down 80%. So you have to make that 80% back. And for a lot of people, when that happens, they'll end up just blowing up their account because they're not willing to move. They're not willing to go back up slowly. Okay. If you've taken hits, right? If you're taking hits 5 days in a row because you're too emotionally invested into your trades, or the market just went the opposite way, because of news, and you didn't get to cut. So understand that it might not be your system. Okay, it might not be your system, but it can be you, right? It can be how you reacted to certain situations in the market, how you as a person, right, reacted to the news, or let's say like, oh, the price is going below support, and you're already down, 20%, 15%, and then you're like, oh, it's all right. I'm only down 15, 20%, and then the market keeps tanking to the point where you can't sell your position fast enough, and now you're down 60%, right? So now you're like, okay, whatever. I'm down 60%. I'm just gonna hold it, right? It expires in 5 days. I'll just hold it till tomorrow and see what happens. So that's kind of the wrong approach, right? I mean, that's different than saying, okay, you took a trade, you're 90%, you're down 90% on it, right? I wouldn't mind holding that till the next day because I'm already down 90%, right? Why not? But if you're still down like 50, 60, where a good chunk is still left in there that you can use the next day or on your next trade, then I would just cut the loss, right? You shouldn't let losses get that far anyways, but if it so happens that you couldn't get out of it in time because of your broker, then you have to just cut it after, my rule is like, if I'm down 60% because I couldn't sell it in time, I'll still sell it, right? And if it gets to the point where it's like it's 90%, then I'll look at how when it expires, and then I might just buy more, and then see what happens the next day if the price action looks good. So, like today was so sideways, right? Today was pretty crazy. Did anyone trade today? Here, you guys look at my screen. Look at SPY. This is ridiculous. It was in a, what is this? Been in a range all day. So one thing I want to do, right? One thing I want to say, when you're in a sideways market, there's a lot of you can really get killed in this. Like you can, right? You can, especially if you want to, especially if your account is not big enough to scalp. Okay, scalping only requires like what, maybe a minute, a couple seconds, a couple minutes, a couple. I don't want to say a couple minutes, but maybe like almost 50, 60 seconds, right? 3 minutes of price action, nothing more than 5. So when you're scalping, when you're going in size, before you even decide to go in size, you have to kind of understand the market behavior too, right? Understand how it moves so you're not affected by any sudden movements, right? Especially if it's still looking like it's in your direction. So when you're going in size, it's like you have a better chance of profiting going in size in a sideways market than day trading it, right? Because you can, if you were to day trade SPY today, you would lose money. If you were to buy calls, even at open, even at 323, and it closed at 323 freaking 40, you'll still lose money because all the price action that happened today, right? It was just up, down, up, down, up, down, up, down, up, down, up, down, up, down. So not every day is one directional. Everybody thinks that the market just goes one way every day. It's like, pisses me off because people aren't patient enough, to wait for an opportunity to come. And what happens to a lot of people too is like they'll get in something, and then like I said, when you get in something, a lot of people have a goal in mind, right? Not the right goal. They have a number in mind. They put in 3,000 on a trade, and they want to make 2,000. They want to make 100%, right? Understand that you don't know if your trade's gonna go up that high, right? It's all about the reason why people make that much money, right? The reason why people are able to make, what people don't see is when people make 20,000, 30,000, right? Sometimes that's a 30% profit. Sometimes that's a 20% profit. That's not a I highly doubt that 80, like 70, even 50% of people who make 50,000, 60, 70, 80 in a trade, I highly doubt that is 100%. Like, I highly doubt that is 100% return, right? Because for me, when I trade, like when I scalp or when I day trade, I usually cut my profits at like 60, 70, maybe 50, 40, right? And I'll be up a good amount. So people have this misconception. It's like, oh man, I want to make what the other guy is making. I want to make 10,000, 20,000. Well, do you even know? First of all, do you know how many percent his gain was that day? Do you know how much that 20,000 in percentage is, right? So if you're already up 100% on your trade, just cut it. Like, I don't understand. Like, if you want to make more money, then put in more money, right? But before you even do that, trade with what you have so you gain the experience and understand the market behavior first. If you don't even know what the market cycles are, if you've never been through all the market cycles, if you haven't been through a whole year of trading, right, and you want to start trading with 60, 70, $80,000 or whatever, like, you're gonna burn yourself out. I've seen, like, even this past year and a half or 2 years, I've seen this thing. I've seen markets go is extremely bullish for 3-4 months. I've seen a lot of sideways and a lot of stocks for like a lot of sideways action for like 6 months, right? I've seen, the market go to shit last year, right? For like four months straight, it just kept falling and falling and falling and falling, right? So if you don't even understand how the market moves, right? If you don't understand how and why it moves and the behavior that it shows, right? Because when you're looking at price, all you're looking at is supply and demand. It's all sentiment, right? It's a sentiment-filled market. It's what people are thinking, what people are expecting, right? That's why psychology is important, because if you want to be better than the next person, you got to be right in the head, right? Because trading is like a war. It's like a war with your own mind, okay? And I'm pretty sure everyone agrees with me, because a lot of people have trouble, like, oh, you know, I didn't take profits fast enough. I didn't cut my losses fast enough. Oh, maybe if I had got in there, I would have made money. So understand that. Don't think of it like that. Just have a plan, follow it. If it doesn't work on a particular trade, then move on. You don't have to switch it up. Right, that's why you test it out. That's why you test your strategy out. That's why you back test it. Like, let's say you go on demand on Thinkorswim and you just try out all these different strategies. Like, this is what I do sometimes when I'm bored. Okay, if you guys are looking at my screen, I'll go to like the 1 minute chart for the day, and I'll zoom all the way in, and then I'll use this. Right, I'll pretend that I'm trading today. I'll pretend that the market's opening, and then I'll just click this right here, this arrow. I'll look at it candle by candle. I'll be like, okay, if the market's moving like this, I'll get in at this break, right? So I'll keep waiting. This candle is probably the candle I'm looking at to enter. And then I see this candle is kind of ugly, so I'll still be, waiting. And this candle, this is probably the candle I'm going to get in at, and let's see what happens. Market goes up, 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 take profit, boom, right? Move on to your next trade. So there's a lot of ways you can practice your strategies, right? There's a lot of different ways. a lot of people don't even want to spend the time to practice strategies, right? Understand that if you're trading, you're putting your money on the line, right? You're risking your money to make money. So why shouldn't you put work in? It's just like any other job or career, right? Although it may be, when you're trading, it might only take 5 minutes. There's a lot of work behind that 5 minutes, right? There's a lot of planning behind that 5 minutes. It's not like you wake up, you look at the charts, you spend 5 minutes, you make 2,000, right? You have to kind of know what you're getting into before you even get into it. Someone asked, so basically, we shouldn't trade the same way we were trading last week, right? So you don't have no. I don't agree with that, because if you don't have to switch up your trading, after a week. No, your strategy will stay the same. Okay, you just have to use it. He said because the market conditions change. No, just because the market conditions change doesn't mean you change up your system, right? If you're using a 30% profit target with 15% stop loss, you have a 2-to-1 ratio, then why would that change just because the market changes? All I'm saying is you change your risk management, right? All I'm saying is for you to be more aware if the market conditions change, because then, right, then your potential losses could end up being faster, right? You can end up losing money faster if you're not paying attention to your system. My system's always the same. I wait for volume, pattern, breakout, resistance breakout, zone breakout, whatever, and then I get in. I don't care if the market is sideways about is my system and how much I'm putting up, right? If the market's sideways, then I'll just go buy 1 or 2 contracts, okay? Or I won't even trade at all. Just because the market's sideways doesn't mean you change your system. You know what I mean? So all you should do is just use less size. Okay, just use less size. If the market is sideways, use less size or don't trade at all. But some people don't. Some people can't control themselves, right? Some people can't control themselves when it comes to trading. They want to make money. I'm not. Who am I to tell you not to trade, right? You're gonna trade yourself, and then you're gonna see what happens, right? And then people lose money, and they're like, "Oh, I lost money today. I shouldn't have traded." Well, why did you follow your impulse, right? It's attractive, right? If you keep looking at it, you're like, "Oh man, I want to make money." You see price go up $2, you're like, "Oh, is it too late? Is it too late for me to get in?" Just follow your plan. It's that simple. Follow your plan, see how it works out. Okay, follow your plan. If you want to use like a risk to reward ratio, just make sure your profit target, you have enough room for your profit target, and your stop loss is not too close but not too far. Like for example, Tesla. Tesla is bull flagging, right? So tomorrow I might get in around, let me see. Okay, so we closed here. So this would be my ideal thing, okay? So tomorrow my Tesla profit target will be around here. If it breaks this level, and if it's still at this level around open, I'll get in after. And then I'll make my stop loss here. I'm just showing this and showing ratio, right? See how far my price target is compared to my stop loss, right? So I have this much room. I have this much room for profit. Hold on. I have this much room for profit, and then I have this much room for my stop loss. Right? So I'm using good risk to reward, right? Because I have, this thing can go up $7, and then if it goes down $2, I'll cut my losses. That's it. Some people will let their losses get all the way down here, and they'll be like, "Oh, should I sell this? I'm down 100. I'm down 80% on it." Well, why did you even let it get that much? You got to figure out where your stop loss is, um, and where your profit target is. Like this, for example, this price action. There's a lot of fake outs here, right? Fake out, fake breakout. So these things happen. You just have to, be aware of the different market conditions. Like if I show you, for example, if I show you the S&P 500, right? Look at this, right? This was the news from yesterday. Look what it did to the market, right? When you look at this, you're looking at the S&P 500 future. So this is taking an average of all of the whole market in general. So when you see this means that every stock you know of is probably down, right? Everything is probably down. Let me show you. Starbucks, see, took a dump, right? Facebook took a dump, right? Apple took a dump. Boeing, Verizon took a dump. CRM took a dump. PayPal took a dump. HD took a dump, but gained back its losses. EA took a dump. So I'm just showing you guys this, like the whole market, right, took a dump. So when you understand, like I look at the futures a lot. Like I'm always looking at it, like every freaking hour, especially when I'm not trading, or like at night, before I make the watch list. I look at it. I look at how it's doing, right? So looking at this thing has a gap to fill here. Okay. So what I'm hoping for is that we regain our traction and go back up, right? Eventually, hopefully breaking this here, right? Because once it breaks this level right here, that's the level where it first gapped down. So now we have a potential to go back up here, right? And then hopefully break this and create new market highs, right? So understand how the market moves, and if you ever want to hedge your position, just buy gold, right? Buy gold, GLD, JNUG, these tickers, precious metals, right? So when the market is tanking, gold is probably going to be up, or Bitcoin is going to be up. So it's always good to kind of, especially if I'm getting in heavy, and so I'm getting in some spike balls, right? I'll just buy some gold just in case. I'll still be leaning on the bullishness of the SPY, but I'm protecting myself from, a big loss if it doesn't go my way. A lot of don't go in too heavy on anything if you're not comfortable. Okay, this is a better way to put it. If you get into a trade and it emotionally sets and it immediately sets an emotional reaction every time the price moves, if it triggers a reaction from within you every time it moves up or down, you start getting scared or you start being happy, then you shouldn't trade it, right? Because now you're emotional trading. It's really deeper than it really goes deeper than what I just said, because there's a lot of cases where it's like, oh, I'm up 1,000, yes, I want to keep making more, right? Oh, I'm down 500. I think it can go back up. So what you're doing is you're digging yourself a bigger hole, a bigger and bigger and bigger and bigger hole every single time. So now you're creating bad habits. Now you're creating the habits of a trader that's on his way to the hole. Okay, now you're just like, oh, now all you're doing is digging your own grave, digging your own. You're gonna start seeing your profits. You're gonna start seeing less profits, and you're gonna start, getting more emotionally invested into your trades, and you're gonna start having more losing days than good days, or you're gonna start having less profitable good days. You'll make 500 on a good day, and then you'll lose 1,500 on a bad day. This is why also, if you've been taking hits, right, a lot of people will just cut their profits immediately, right? They're like, oh, they always want to protect it, right? It's important to protect the profits, right? But it's not important to protect it because of the reaction that you had prior. Okay, every trade is new, every trade is different, you know especially when it comes to losses. Just all you do is just sell it. Just doesn't matter. Doesn't matter if you're down 30%, right? Just sell it. If it has already gone beyond what you planned, then just cut it. If your system is no longer in your favor, then cut it. If it's below your stop loss, then cut it. Right? Someone asked even swings. So let me say this, okay? You guys know what swings are, right? What is the reason for swings? Let me ask you guys that. What is the reason you get into swings? Okay, long hold, high probability trade based on outlook of market or company. But what is the factor that you have when you swing? What is that one key factor that you have? It's one word. What is the one key factor that you have when you swing? Time. You have time, right? You have time. So if Verizon, right, if I swung Verizon and Verizon goes down here today at the support, am I gonna sell this just because it fell to support here? Am I gonna sell it? And it expires 3 months out. Will I sell this if I'm down $100 on Verizon just because it went down 50 cents from yesterday's entry? Am I gonna immediately sell this? No. I have 3 months, right? Essentially, I have a month and a half, right? I have a month and a half for this to move back up. And I'm not just looking at Verizon. I'm looking at everything else that has to do with Verizon. I'm looking at the whole market, right? I'm looking at the whole market. If the whole market is up and Verizon's tanking, then that's an opportunity for me to take. Because then Verizon's just gonna follow, right? Verizon's the lagging stock, right? So some names don't even move until everything else is moving. And then you see that one name blow up out of nowhere, right? If it breaks the trend, then yeah, you exit. But is it a clear? Are you looking at a clear trend, or are you just making up a trend that you think it's breaking, right? So right here, Verizon, I would only cut if it breaks here. You know why? Because there's support here. There's support here. I'm risking, right? I know what I'm risking, right? People will swing stuff and not know what they're risking, and then when they're down because the market took a shit for 2 days, they immediately cut it, right? And they don't even know where the support or the trend is. They just know they're down. They're like, oh, this trade's not going my way. You know, not even realizing that it has 3 months to expire. It's like, okay, now you just took a dumb trade, right? But you learn from that. Okay, you learn from that. So if Verizon goes down here, then yeah, it's bad. That's not good, right? But if it just goes here, for example, here, and then it goes back up here, it goes like this. Let's say it goes like this. It's like this, like this, like this, like this, like this, like this, and then it goes here, and then it goes here. That's only what? 1, 2, 3, 4, 5. That's only 5 days. You have 3 months. Okay? When I swing something, I'll swing it until it goes my way. Or if it like Asterisk said, if it breaks a trend, but make sure that trend is a critical level and not just a trend that tested yesterday. Right? So be aware of what you're getting into and have a, like for me, when I trade, I always say this. I took a hit today, right? I took like a $1,000 hit today. It's whatever. It's a loss, right? Whatever. My face was just indifferent, right? I was just looking at it like, oh, all right, whatever. I'm gonna cut this loss. And what I did was I walked away from my computer. I just walked away, right? I was done for the day because I knew the market was shit, right? The more I stayed in and tried to make my loss back, the more I'm gonna dig myself a deeper hole, right? I'm fine with the loss I took today. I'm fine with it. It happens, whatever. It's part of the game. I'm not mad about it. It might have been, part Thinkorswim's fault for being so fucking slow, but at the end of the day, I decided to take the trade. I decided to put in the size that I put in. So you can't really blame the broker for that, even though it can be, somewhat their fault. But at the end of the day, who's clicking, who's pulling the trigger? You are, right? So never blame anyone else for what happened to you because you decided to trade in the first place. If you never traded that day, you never would have lost money. So just think of it like that. And then when you guys look at your next trade, right, just be aware. Have a plan, okay? Like tomorrow, I'm planning to trade Tesla. This is my plan for tomorrow. So I know when I look at Tesla tomorrow, I already have a plan for it, right? Like I showed you guys earlier, right here. So tomorrow, my plan is getting in here, and riding it up here. That's it. And if the volume starts picking up again, I'll maybe, try to get in again, size up, or, now my profit target becomes here, right? And if tomorrow, if my trade doesn't go my way, I'll cut it over here. That's it. Right? You don't have to overcome. The more you make your trading simple, the more easier it is. The more you make your plan simple, the more easier it's going to be. If you have $1,000 account, don't trade with 6, 7, 800. Trade with 100. Trade with 200. Trade with $50. Okay, especially if you haven't been trading for long, understand that patience goes a long way. Not even patience to grow your account, but patience to learn, patience to experience the market. Okay, if you have the patience to, practice your risk management and not focus so much on the money you're gonna make, you're gonna do so well, right? If you like, let's say this is just, this is kind of stretching it out, but if you spend a whole year practicing, let's say you make enough money, let's say you have a salary of like 60, 70K a year, whatever, 50, 40, you're making decent money, right? And you want to create another source of income, right? That's what a lot of people start trading for. But let's say you're new to the market, right? You immediately want to start making 5,000, 10,000 a day. You're like, yeah, I have a $30,000, $40,000 account I can start with. You know what I mean? I'm gonna start trading. Hold on one second. So I'm gonna start trading, you know, with a $40,000 account, but I've never traded before, right? So what do you think is gonna happen to that person? I don't even if he's following someone else's trades, right? What do you think is gonna happen to this person when he starts trying to take matters into his own hands, right? Especially if you're the type of person who likes to gamble. If you're a gambler, I feel like a lot of traders are sort of like gamblers, um, or they like to sometimes. So a person who's new with that size account, they're gonna blow it up. I've seen people blow things up. I've seen people go from 30 to 0, right, in a matter of like a week. Just because he didn't know how to handle it. If you've taken enough losses, then you will understand that the market is unpredictable, and the best thing you can do is to manage your risk, right? And don't think like everybody else. You know what I mean? Don't think like the masses, right? Don't be the herd. Don't just follow the herd. All right. The reason why I get into breakouts with volume is because I want to be the first one to get into a trend, right? I want to be one of the first ones to catch the trend and get out while everybody is still getting in, right? Because then what happens is when everybody's getting in, you know, the big money will try to sell, and then now everybody else is losing money, right? That's the whole cycle of it all. So understand, okay, the market is unpredictable, and it's just like all you have to do is follow your plan, and if it works, it works. If it doesn't, cut your losses, right? That's it. That's you can be profitable like that if you just keep following it. If you cut everything off early and you let your profits run enough, then in a whole year, even if you've had, you know, 75% of it was losing days and 25% of it was winning days, you can still make more money. You can still make money because of your winning trades, right? Because you're able to you know, get in with volume, then you size up, right? Let's say you make $500 a trade, but then when you're losing, you're cutting it at $30, $40, right? So the key is to kind of be able to stay in the game. Roderick, are you back? A-Rod. Anyway, so I wanted him to speak on some psychology because Rod is beast. But did you guys experience any emotional reactions to any of your trades this week? Like, did you have any? Did you get into any trades where it's like, you cut because you were mad that you were down or whatever the case may be? You guys, you guys cut space already? This is a long hold. My thing expires in 4 months. I don't even care what it does right now. Look what it's forming though. You guys see what it's forming? It's bull flagging on the 4-hour chart. Look at the weekly chart. I mean the daily, my bad. This is one of those early stocks that just, you get in early enough, in a year or two, you're gonna make some bank. That's it. People want to make money so quick. That's how people lose money too. First of all, if you wanna trade, you can dollar cost average, and you can dollar cost average swings if you wanted to, right? It depends. A lot of people ask, would you add to your position? Would I add? Well, what I have is different from what you have, right? If I'm gonna add it, I'm gonna add like maybe like what, it depends on how many, like when you add your swings, okay? When you depends how much money do you want to put in your swings in proportion to what you have in your account. If you're gonna put 50% on swings that is gonna expire in 8-9 months, right? Then you only have 50. Then you only have that 50% of that other 50% to trade for the next 8 to 9 months. Like, yeah, I'm gonna add to my position, right? I'm gonna add maybe like a couple more contracts, but I'm not gonna add too much. I'm gonna add like maybe 10 every month, or I'm gonna buy. I already have shares for it anyways. I have like 300, 400 shares for it. But I didn't just buy them all at the same time. I bought like 100, and then I bought another 100 3 weeks after, and then I bought another 100 and a week after. So I didn't just buy it all at once. That's how you lose money too. So yeah, the market will switch up on you. Okay, there's another way to in determining if you're gonna run into a sideways market, right? If you look at ES, you have to understand what the news is, what's happening, right? With the news and everything that's going on in the world. Okay. The stock market doesn't just move because it wants to move. It doesn't just go up because you want it to go up. It moves for different reasons, right? There's different reasons why it moves, and we don't know that. We don't know the exact reasons why Snapchat would move. Sometimes the news will come out an hour later, and the move was already made 2 hours prior, so you don't know what really moves it, right? What you know is if you're looking at the futures and it's doing all this, then you know that the market's going to be sideways, right? It's not, it's not bullish where like it's not like this, right? It's not like this. The market, the futures is not like this, but it's like this, right? It's like that. That's sideways. Don't force a trade ever. People want to force trades. Don't force it. Don't ever force anything. Wait for the right setup. If it doesn't show up that day, don't trade. That's it. Why is it so hard to not trade? A lot of professional traders don't even trade every single day. That's the crazy part. People who make tons of money don't trade every day. Why can't people do the same? Right? I'm gonna look at one more name. There. How do I think the market's gonna move tomorrow? I have no idea. I have no idea. The virus was they found a cure for it, but yeah, you don't know what how people are gonna react to it. It's all psychology. How do you think people's gonna react to it? Right? How do you think day traders are gonna react to it? How do you think big banks are gonna react to it? How is the president of the United States reacting to it? Remember, this thing is set up for people like us to lose. So if you can't beat them at their own game, beat them in their mind. Beat them with your mind, right? Like this, Micron still looks good for a move upside. We'll see though. So right here, Micron fell on support. Look how it just tested support and bounced back up. So I think that this thing has potential to at least run up to here. Maybe here. But all right. So to end this for the day, just be aware, right? So today's lesson is to be aware of everything that's happening before you decide to get into anything. You're not missing out on anything. Trust me, you're not missing out on anything. Unless you're trying to get in the first 5 minutes, right? To where you have to be really focused. Like in the first 5 minutes, I'm literally looking at everything like this, and I'm seeing how it moves. It's not like I'm gonna get into any of them. I'm just looking to see how it moves. If if Boeing, Roku, Shopify, Baba, MU, Verizon starts moving up at the same time, then I'll look to get in calls because they're all synchronized with each other, right? All showing up volume. But if the futures are sideways, if I see the futures are sideways and I see Amazon just moving up by itself, I'm not gonna get in Amazon because then I know that when you see the futures market sideways or it's going down and you see just one single name that's going up, more than likely that name will go back down because that name can't push the market up by itself, right? When more names go down, more sellers come out. The more sellers come out, they're gonna go for the big volatile stocks, right? And now the thing that you see that's moving up like crazy is gonna start selling off like crazy. So just be aware. So tomorrow, what we should do is before the market opens, look at news from last night and see what kind of news played out from last night and see what news kind of you know um is what kind of because news will literally create ripple effects like the Iraq news or the coronavirus. That thing was that's kind of old news, right? It's been out for like a couple weeks, but now you see the market how it's reacting to it now, right? So just be aware and just wait before you get into anything. Just wait for confirmation, and if it doesn't go your way, then cut it. You don't need to hold it. The key is to stay in the game, right? Not to trade like you want to retire tomorrow. So I'm gonna end it for today. You guys learn something about psychology. Might go over more tomorrow. There's a lot to talk about. It's all fear and greed, basically. It's all just supply and demand, how people think, how you think as a person. Believe it or not, self-development is detrimental to your trading. But all right, guys. I will see you guys tomorrow. If you guys learned a thing or two today.